Hey folks, welcome to another episode of Titan Traders. I'm your host, Pro Trader Gareth Soloway. Today I have the pleasure of welcoming an Ironman, a trader extraordinaire, and a CNBC Fast Money regular, Adami. Welcome to the show.
Gareth, a pleasure. I would not say any of the Ironman, yes. Extraordinary trader, absolutely not. I have been with Fast Money since its inception, but it's a pleasure to be with you today.
Thank you so much. And yeah, we really appreciate it. So I got to ask you, do you still do workouts? I mean, I do sometimes CrossFit. I do sometimes, Orange Theory, try to stay in shape because I sit so many hours a day in front of the computer trading. Do you do any of that anymore, or is that kind of history at this point?
So I did the New York City Ironman in 2012, the first and subsequently last. Just logistically, it's a nightmare, especially in cities like, New York. It's one thing to do it in Coeur d'Alene, Idaho, and entirely different to do it in New York City. But I'm considering doing another one. It's like one of those things, you climb Everest once, you have to do it again to validate the first time. And unfortunately, I think the answer might be yes. So I gotta sort of it's one of those things you have to work out to work out. You have to train to train, if that makes sense. So I'm nowhere near where I need to be, but I would love to be able to do it one more time.
Very cool. Very cool. And I know you did it for charity, right? You did it for charity back then?
Yeah, I'm on the board of the Leukemia Society, the New Jersey chapter, and we put together a team of 10 people. I think 7 of us made it to the starting line that day and 6 of us finished. And if memory serves, I think we raised a little over $700,000 for the Leukemia Society, which was a huge deal back then. So I think the only reason I was able to finish is because I was doing it for the right reasons.
Gotcha. And the one thing I will say, and just jog my thought process, but if you do it again and you do it for charity, I definitely will be on the donation side.
No, I appreciate that. Absolutely. Thank you so much. I mean, just having you mention it means a lot. So thank you.
You're welcome. So I have another question that's kind of something that's always bugged me. I watch you on Fast Money.
Fire away, brother. Fire away.
So every time Fast Money starts and you're on, you always get to go first. In my head, for some reason, I've always wondered, is this a seniority thing? Is it Adami because it begins with an A? They do it alphabetically. Why, is it just because you're special?
No, it's none of those things. It's interesting that you mentioned that. And we don't talk about doing it that way. There's nothing that's rehearsed. I think what winds up happening is Melissa, I think, intuitively understands that maybe I can sort of formulate or synthesize the conversation and get it going sort of in a direction that she wants to go. Again, it's not that we talk about it beforehand, and there've been times I'm sure the show has started with other people, but you're right. I would say by and large, the show does start with obviously Melissa, then she sort of throws it to me, but then it opens up the conversation. So I think the best shows are the ones where you hear from all of us an equal amount of time. And I think that's sort of the magic of the show, is that you get 4 different opinions over the course of an hour.
Absolutely. Yeah, it's valuable. That's why I tune in. So thank you. How did you get into trading? So I was reading your bio a little bit, but it doesn't really tell me how you got introduced to it. When I was a young student in high school, I did the investment club. It happened to be with the .coms era. It was fake money back then, but it just blew my mind. I mean, how did you get into this?
So I grew up in northern Westchester, which is, my town is probably 35 miles-ish from New York City, maybe 42 miles from Wall Street, give or take. But I didn't know what Wall Street was growing up. And I went to college, I went to Georgetown. My senior year, over Christmas vacation, my parents were representing a guy that had left his firm and started working at a place called Drexel Burnham, which I'm sure some of your listeners remember. My parents were both attorneys, and they asked if I could come visit them, spend some time with them over Christmas vacation, and they allowed me to do that. So over the course of a week, probably between, I don't know, the 28th and the 2nd or so of January, I went in, sat on the desk. Nobody talked to me. On the Friday of the last day, somebody came up and said, "Listen, you've been coming here every day. What's your deal?" I said, "Well, I was hoping to get a job." And they said, "Well, why don't you come back in after you graduate and we'll talk." And that's how I got into it. I had no preconceived notions. I had no real understanding of what Wall Street was, but I knew I needed a job. And that's when I started. I started in May of 1986, and I've basically been doing it for the last 35 years. So there you go. I mean, I didn't have I will tell you, when I was in college, I had no thoughts whatsoever about being on Wall Street. I didn't know really what I wanted to do, and it sort of just fell in my lap, and you sort of navigate your way through.
Wow. Very cool. All right, so let's get into some of the meat and potato type stuff. I know you talk about the Federal Reserve. I don't really
Yeah.
think you go into it in depth sometimes, but I kind of wanted to delve into, your thoughts on the Federal Reserve in terms of what's their end game? I mean, do they have an end game? Are they just trying to kick the can down the road like our politicians that are just trying to get reelected?
Right.
I mean, how do they even expect to get out of the next crisis when they're not even raising interest rates back to normalized levels during this period of expansion now that we're through this COVID period?
No, I appreciate that. And I know you obviously watch the show, and you've heard me say it a number of times, dozens of times, that I think, and I believe this, and it's my opinion. I'm not suggesting I'm right, but I think amongst the many villains of the 21st century, and there will be many, I think central bankers will be at the top of the list. And I don't think they necessarily are malicious or bad intent. I just think, like many things in history, some of the most disastrous outcomes have been born out of great intentions. And I think that's what we're seeing here. But to continue to go down the policies that they continue to push forward, thinking that somehow it's going to be different, I think is foolish, whether they realize it or not, whether they understand what they're doing. The biggest wealth gap in the history of our country has been created by the policies of the Fed. And here we are now, and they continue to do that. I mean, these policies, these interest rate policies, they're $120 billion worth of purchases a month. All they're really doing is making that top 1 or 2% wealthier, and they're doing nothing to address the wealth gap that we see ourselves in. So, they think they control things. They control the outcome the same way a Met fan thinks he or she can control the outcome of a game by turning their hat inside out. It's folly.
Yeah. Do you think that, I mean, they assume that they can control it, but I mean, I gotta believe that Jerome Powell knows that there's going to be a point where there's another crisis. And does he think that negative interest rates are going to be the answer at that point? And will the market even cooperate with that if the market then takes control?
Yeah, I'm not sure what he thinks. I listen. Obviously Jerome Powell is an extraordinarily accomplished, intelligent human being, and I think he went into the Fed trying to change things around. Like if you remember the October 2018 Jerome Powell, the one that said they're going to normalize rates and they're going to be sort of on autopilot. I'm paraphrasing in terms of reducing their balance sheet. I think he was on the right path. Now the market said otherwise because, as you know, from that October period to mid-December, the stock market went down 19.9% in a straight line. And I think he got spooked by that, one. And I think he was under tremendous pressure by the Trump administration, number two, and they reversed course. Now, you can't do the counterfactual, and I'm not going to try to do it, but I do believe they were on the right course and they should have done with it. And it would have been painful. I understand that. And the market would have probably continued lower. But I happen to think we'd be in a much better situation now if we had gone down that path. Does he understand what he's doing? I think that he does. But the problem is you can't run as a politician on the platform of it's time for us to take our medicine because
Right.
you're not going to get elected. So everybody promises the moon and everybody tries to deliver that. And to a certain extent, the Fed has become sort of the backbone of all those different things. But I think it's it's foolish, and I think it's going to lead to tremendous problems going forward. And I encourage you folks. This is the analogy I use. The day of the Great Chicago Fire, I think it was October 9th, 1861 or something. I'm sure my dates are off, but there was also a fire in Peshtigo, Wisconsin, killed anywhere from 1,500 to 2,000 people, depending on the textbook you read. To this day, I think it's the deadliest fire in the history of the United States. But born of that was the Forestry Service, and in large part, their job was fire sequestration. Why? Well, because fires are destructive, unsightly, and they're deadly as well. And for a long time, they were able to do just that. They were able to tamp down these fires. But what they learned is the hard way that fires, as painful and as destructive as they are a natural part of the cycle. Old trees burn down, new trees grow, and that's how things regenerate themselves. And it's important. It's as important as any other part of the cycle. Well, the Fed tried to alchemy out the recession portion of the cycle with Chairman Greenspan, and they were able to successfully do that. The problem is, and they've learned the hard way, that I believe recessions are a natural and important part of the cycle. And to think you can them out for a period of time is true. But there's a commercial when I was a kid. It's not nice to fool with Mother Nature. Well, that's what they're doing right now.
Yeah, and your analogy is a great analogy, and with what the Fed has done, I've often talked about to my members is, it's like a drug addicted patient, right? I mean, the doctor can keep feeding drugs and more drugs, and the patient needs more drugs, but eventually you either kill the patient or you have to take them off the drugs, and then it's a nasty situation as
Hmm.
well. And yeah, it does make me wonder, like, I have young children. I know you have children. What do you tell them in terms of, how do they handle the financial nature of the future?
Yeah, what can you tell them, right? I mean, we are absolutely mortgaging we're putting them in a very difficult situation. There's no question about it. But you sent, and I hate the term, I'm not suggesting because everybody uses it, that kick the can down. That's exactly what's going on. It'll be somebody else's problem at some point, and all the administrations do it, and all the Fed chairs, not named Paul Volcker, seem to do it, and it's absolutely problematic. I mean, you think about it, debt to GDP in this country is probably 150%, give or take. I mean, you're talking about, I would say you're talking about a market cap in terms of the S&P to GDP of probably approaching, well, I'm just trying to think out loud where we are in terms of that 205% ish. I mean, these are unsustainable numbers by any stretch of the imagination, yet here we are. And they're all, to me, they've all been fueled by these Fed policies that were important at the time. But you talk about overstaying your welcome and staying too long at the party. That's exactly what's going on.
I've often speculated that at some point, like you said, you'll talk about the biggest villains, and the Federal Reserve and other central banks will be them. Do you see the Federal Reserve potentially going away, or being kind of wiped away, and then maybe a new entity coming from that? I mean, does that kind of come into the purview?
Yeah, well, it's a great question. I think, if you really, and I know you pay attention to this stuff, I think, in a lot of ways, that's what this whole Bitcoin cryptocurrency, I think, was born out of a fear for what's been going on with central banks. This fear that fiat currencies are going to be basically as destructive as they've been historically, and something's got to rise from those ashes. So I think to a large extent, this DeFi that you hear about all the time now was born exactly this. So is the Fed going away? Probably not, but have they gotten away from their mandate? With 100% certainty. For example, on a hockey team, a goalie can only stop the puck. That's his or her job, is to stop the puck. But when they try to start doing other things like stop the puck and then skate up ice and try to score a goal, that's going to be problematic. You have to allow your forwards to do their job and their defensemen to do their job. The same way the Fed should just do their job and allow fiscal policy on the other end to do its job, and all those other things that should be taking place. They're trying to do the job of not only themselves, but everybody else. And listen, they can do it for a while, but it's going to end disastrously, in my opinion.
Yeah. Do you see? I mean, one of my big concerns is that the writing on the wall is potentially for the reserve currency of the dollar, whether it's in 10 years or 50 years, to eventually not be the reserve currency. It seems to me like China's starting to lay the groundwork work with the digital yuan to take
Hmm.
over the reserve currency, in which case the dollar's in a huge amount of trouble, considering all the foreign powers hold tons of dollars because it's the reserve currency. So what are your views in that respect? What's going on with China with the digital yuan? And then, obviously it extrapolates into Bitcoin. That's my guess of why they're trying to get rid of Bitcoin, because of they want the digital yuan to take over. What are your thoughts there?
Hey, the only good news for the dollar, in my opinion, is that every other central bank is trying to do the same thing. There's this global race to zero. So the only saving grace for the dollar is the fact that everybody else is sort of acting in kind. But you know this, and I know this, and I'm sure your listeners do as well. A month and a half or so ago, Stan Druckenmiller made a comment that he could see the dollar not being the reserve currency in 10 to 15 years. I actually think he's probably being he's probably, in terms of that 10 to 15 years, I think he's a little long in the tooth. It's probably closer to 5 years. And we're right on the verge of that, because you can't continue these policies without having some destructive nature to the dollar. In terms of the Chinese, I'll say this, and it's probably going to offend some people. I'm not meant to, but they're probably the best capitalists in the world. Where we play a 5-minute game, they play a 50-year game. And, they're willing to lose the battle or battles in order to win the war. And in this case, it's a war in terms of global dominance on the economic front. And I think, unless something fundamentally or drastically changes, they're probably going to do exactly that.
Yeah, and it's not to, I think you're 100% right on that. Is when you don't have elections in a country, like China, Xi doesn't have to worry about being reelected
Right.
necessarily. It gives him that ability to look at the longer term versus our politicians who are just worried about 4 years from now or whatnot. So yeah, it's a huge issue. What are your thoughts on Bitcoin and cryptocurrency? Are you a fan? Do you hold any? What are your thinkings there?
I've tried to understand it. I'm going to be perfectly honest with you. Brian Kelly, who's on Fast Money, from time to time, I know you know the name. He literally wrote the book about it in 2014, and we've talked extensively. And I still have a very difficult time sort of wrapping my arms around it. I understand it at a certain level, but not nearly at the level that I should in order to invest in it. Now, I know for a lot of people that doesn't matter. It's just a bit of a flyer. And if you have disposable income and you're looking for a binary outcome, I think, listen, Bitcoin is fine. I've interviewed Michael Saylor, the CEO of MicroStrategies, a number of times. I actually did an hour-long interview with him a few months ago that was fascinating. And he will tell you in a very clear-eyed way that corporate balance sheets in the United States are liabilities unless they have some semblance or some portion of it in Bitcoin or cryptocurrencies. And you've seen what he's done. They now have over 100,000 Bitcoin on their balance sheet. Now, we'll see if that plays out and if that works to his advantage. I have no idea, but I don't understand it nearly well enough to make an educated opinion on its viability. I will tell you, as you know, there's some people that have outwardly said it's the biggest scam in the history of the world. There are other people that think it's going to $1 million a coin.
Yeah.
Obviously, the truth is probably somewhere in between, but I'm not smart enough to figure out what that truth is.
Gotcha. Turning to stocks, the meme stocks,
Hmm.
the craziness there. I've likened it to, it reminds me, and again, this was my really early in my career in the mid to late 90s, but that hype around those dot coms and how that kind of played out. Do you see that same comparison? I mean, do you think that this is a new era that we're entering?
It's an interesting question. I think you bring up the great example. I don't think it's a new era. I just think it's a 2.0 or 3.0 of what we've seen already. I mean, it's just now, whereas people used to talk about stocks at cocktail parties or in bars or with their buddies or friends, now they're doing it in these chat rooms. So nothing's really changed except that technology is able to spread these things a lot faster. I'm convinced, by the way, and I've said this on the show, I'll say it to you. I think many of these Wall Street Bets, the Reddit community. I think there's some really, really bright, educated, intuitive people out there that understand convexity and volatility probably better than the people that get paid to do it. Number one. I also think that there are a lot of hedge funds that are probably infiltrated, and that's a word I'm choosing to use, these chat rooms to have people either monitor or participate. And I can't speak to the legality of it, but I'm convinced that that's what's going on. So is it here to stay? Absolutely. But has it been here throughout the course of history? Without question, it's just coming now in a different form.
Yeah, that's what drives me nuts too about the meme crowd is the kind of the push to say, oh, we're sticking it to these big institutions. I think maybe initially when it first began, that's what happened. But institutions are notorious for acting very, very quickly when there's money to be made. And
Hmm.
especially lately with AMC, and we saw Newegg and all these other things. I mean, an institution can infiltrate you, especially on the internet. You can be anyone you want with any handle, and you pump a stock, you push it with a few $1 million, and before you know it, you get a few million people to buy in, and you ride it up and then sell into that momentum. So I mean, it's nuts, but I wish that they would understand that. I don't think they do. I think it's more important to them to have that kind of rah 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 type mentality.
No, and it's interesting. I've said it on the show. I've written about it. Like, I wonder aloud who the William Wallace is of this group, because again, there are many, many soldiers fighting, waging this battle against an enemy they think they should be fighting against. Quite frankly, I'm not really sure who they're pissed at or who they're trying to stick it to. But I do think clearly there is some puppet master or puppet masters out there, somebody that's pulling the strings. And that's not to suggest that the foot soldiers can't do extraordinarily well for themselves in the meantime. They can. but I do think there's somebody or some group of people that are pulling the strings and setting forth the agenda and using these people to their advantage. Just my opinion.
Yeah. When it comes to China and what they're doing with Diddy and that, do you see that as more of a macro play where they don't want any of their companies listed in the US anymore? Or is it kind of a situation where these companies have grown so big, the government's getting a little scared and they have to reassert their dominance? And once they do that, it'll kind of be like clear sailing again for a lot of these stocks. Because I've invested, especially the last couple of days, I've been accumulating Alibaba, Baidu, different ones like that. And a lot of the members that I have too have done the same. And I'm kind of going on that aspect. They seem cheap, assuming there's an end in sight with the government. What are your thoughts on that?
Yeah, I think it's the latter. I do think they're flexing. I think they allow companies or individuals to do well to a point, and then they sort of have to flex, right? Then they have to say, hey, wait a second, understand what's going on here. At the end of the day, we're still in charge. And he also is the 100-year anniversary of the Communist Party, right? So I think there's a lot of that going on as well. And I do think, I've said this on air, and I'll say it to you, I think the market challenges every incoming Fed chair the same way I think the Chinese will challenge each incoming presidency. And I think that's what you're seeing here as well. So is it a flex? Absolutely. Will they take their foot off that gas at some point? I do think they will. I just don't know what point it is. They're obviously not looking to bury their companies, but I also don't think they want their companies to get to a point where they become bigger than the government, if that makes sense. I don't think they're looking to have a situation where you create a Facebook or an Apple or a Google or companies that have basically, you think about the extent that they've become a part of our everyday lives here. I don't think they're looking for that to happen in mainland China.
Yeah, yeah, and I could definitely see that, or even the power of an Elon Musk, where he
Hmm.
tweets one thing and it has such an amazing reaction. And like you said, the analogy I use is, I have a 3.5, almost 4 year old, and I let her get away with a little bit here, a little bit there, a little bit there, but eventually you got to put your foot down. And I think that seems to be what the Chinese government probably is doing, drawing that line and pushing back just a little bit. When it comes to investing, there's millions of new investors, right? We hear about the accounts being opened at all these brokerages. Kind of coming full circle to where we started the interview. Do you have some advice? Like, I mean, going through everything you've done in your career, someone new who's just getting involved, who has, maybe just $10,000 or so, what do you tell them about getting invested and maybe even following a path like yours, getting into the markets?
Yeah, it's interesting. And I think you would agree with this. The dynamics, the discipline associated with it doesn't matter if you have a $10 or $10 million. The discipline is exactly the same. So I think first of all, do not take into consideration how much money you think you should have or have, and don't equate it to, well, if I had this much money, I'd be doing it differently. The discipline is always the same, number one. And what I try to tell people, and hopefully this will resonate, there are two groups, as you mentioned. You're either a trader or an investor. I don't think you can wear both hats. I am not equipped or smart enough or disciplined enough to do both. And I'll explain to you why I think that is. When you put something on as a trade, if it immediately goes against you, in your mind, you can say, well, you know what? It makes sense. It's going against me. Instead of a trade, this has become an investment. And on the flip side of that, if you were to put something on as in a 10-year investment and immediately goes in your favor, you wind up trading it. And you say, well, look, I can't believe I'm up 6% in 2 weeks. I got to take some money off the table. And my point is that's unsustainable, because what winds up happening is bad trades become investments and good investments become trades. And it's very difficult to wear both those hats. So just understand which side of that fence you're on and then do it that way. In terms of the discipline, you have to have a plan going in if you're a trader. And the plan is, I'm buying something at X, but if it goes down 5%, 6%, whatever it is, I'm getting out of a half, a quarter, a third, and I'm going to reevaluate. You have to be proactive, not reactive. Some of the best traders I know, a guy named Mark Fisher, for example, who's a legend in my world, he will tell you that he can be right 25 or 30% of the time and still manage to make money, because he intuitively understands when he's wrong and pulls the ripcord. And when he's right, he pushes the envelope. And I think as a trader, that's how you have to sort of recalibrate your brain.
Gotcha. And for viewers out there that are going to be watching this over the next couple days, where can they find more on you? I know you have a podcast. Is it with Dan Nathan? I mean, where can they come and watch you?
I appreciate that. So we do, Dan and I, along with a guy named Danny Moses of Big Short fame. Danny Moses was actually mentioned in two of Michael Lewis's books. I want to say the Flash Crash one. I can't remember the name of that book, and The Big Short. And so Danny Moses is on this podcast as well. We do a podcast called On the Tape, drops each Friday. I think we've been doing it since February. We've actually quickly gone into the top 1% of podcasts in terms of downloads, and people seem to like it a lot. We do a lot of things during the week on different formats, different distribution networks, and obviously I'm on CNBC Fast Money pretty much every night over the last 14 and a half years, which has been really remarkable and a gift.
Awesome. Very cool. And then the last thing I'll ask you is in relation to the markets, based on where we are today, let's say you have a 1-year horizon. Would you choose, if you had to choose one, right? So I know getting into these games that you play sometimes.
Would you rather? Go ahead.
Would you rather be in cash, in stocks, or in another entity?
Yeah, that's a great question. And look, I mean, I understand that, look, the stock market basically goes up, right? Over time, the stock market's going to go higher. So you understand that sort of buy and hold philosophy that so many people espouse. And if you try to time this thing, you're historically not going to do pretty well. I look out there and say, there are so many warning signs that are flashing red that the market is just looking past. I think one of those reasons is the advent and the rise of passive investing, because that looks past all the bad news and money just flows in regardless. So I think there's that aspect of it, but just be aware of what you're getting yourselves into. I mean, we're at historically expensive levels here for the stock market on a number of different metrics, not to suggest it can't continue to go higher, but just go in with eyes wide open. So to answer your question, I mean, stocks are still the best game in town, albeit an expensive one.
Gotcha. All right, Adami, thank you so much for joining us on Titan Traders. It's truly been an honor and an insightful conversation, and I do appreciate your time. Thank you so much for joining us.
Thank you, Gareth, and thanks, folks, for listening.